Good morning, everybody. Peter Ciccone, Entrepreneurs Across America, Diner Discussions. We are back at the Infinity Diner, and I am talking with Sheldon Grant here.
Good morning.
Good morning, and we're going to talk about the wonderful world of insurance, commercial insurance, business insurance, and personal insurance, and what it is you need to do about insurance and how to buy insurance. You're with Cotgreave Insurance Agency. You're a sales agent. You called yourself a producer. What do you do, buddy? And welcome aboard.
Thank you. Thank you for having me. I
my
appreciate
pleasure.
it. So, property and casualty insurance. This is different than what we would call life insurance or health insurance. These are the tangible items that we own, that we care for, that we've accumulated over time, whether it be our home.
PNC, what do they call it?
Property and casualty, PNC is what we say in the business when we have to shorten everything. But yeah, these are the things we've worked hard for that are valuable to us. These are our assets. And,
So if you own a business, it's the trucks, it's the building, if you own a house, it's the house, it's the cars, it's the valuable assets within the house.
Absolutely, it's your personal items, the things you would take with you when you move. It's your boat, it's your motorcycle, it's your engagement ring. It's all of those things that you care for and would be very difficult to replace if they were stolen or if they were lost or lost in a tragic
So what
fire.
is it that you tell people they have to be aware of when they buy insurance?
People need to, well, let's start personally. If people need to, obviously there's nothing wrong with shopping around, which is what we do. We will search our markets and we'll find the best coverage for you. You need to make sure that you're covered for these losses that can happen, these unexpected things. We hope they never happen to us, but they do happen. Every day we get claims, and they need to know the value of their items. They need to constantly check it. I mean, over time, we all accumulate things. Okay, and we add things, and we things go, things come. And right now, we're also living in a time where it costs more to build a home than it ever has. Okay, so when you get your homeowner's insurance and you take a look at it and you see that line that is dwelling A, that's the most important number on that. That is what the insurance company says. Hey, if you lose your home, it would cost us this much to rebuild it from a complete total loss to rebuild it to the state it's in
Dwelling
right now.
A is the number, is the line, most important line you want to look at.
100%.
On your dwelling A, I'm gonna.
It's on that homeowners. It's A.
Check that out.
It's dwelling A. Look for that number. So now, things cost more than they did. You don't want your insurance to just renew at that number because they're not going to give you a penny more than that number. So certain people they look at the premium. I can afford that. They pay it, but that number might not be sufficient anymore.
Okay.
We have to now have that looked at again, and maybe a little bit more. And believe me, it's worth it to have that number be accurate to make sure that you are properly covered.
So replacement cost, whenever you buy insurance, it's replacement cost that you're looking at as the driving factor of what's worth insurance or what's not worth insurance.
The replacement cost is ideal, but there's also the option of what we call actual cash value. That costs less to have, but certain things you're not going to get replacement costs.
What's actual cash value? What do you mean?
All right, so let's say my roof, okay? Roof has a lifespan in the insurance world of 20 years.
Okay.
Okay? 10 years into the life of that roof, we have a little fire, we have a loss.
Okay.
You're not going to get the brand new value of a roof because your roof wasn't brand new. Your roof was 10 years old.
They're going to replace, they're going to give you the value of the roof 10 years old, half as much. So let's just say the roof was $15,000. They're going to say, we owe you $7,500.
These are the things you need to look for because if you're not careful and realize what you're paying for, you may be signing a policy that's an actual cash value of a policy versus the replacement cost.
Versus replacement cost.
You have the option sometimes.
You have the option, and you pay more. Right?
You will pay more, yes.
But you have replacement cost
versus actual cash value. Certain things it's no option. I just use the option of the roof as something, but there's certain things there's no option. Certain things there is the option, but you want to obviously steer toward replacement cost whenever you can.
Okay, so replacement cost, if you can, versus actual cash value. Those are and dwelling A on your homeowner's insurance.
Right.
What car insurance? What are you looking at?
Car insurance is very tricky right now. Listen, the best advice if you walk away from anything right now is to keep your license clean.
Okay.
Keep your license clean. Do your best with your credit.
What does credit have to do with insurance?
In the world of insurance, underwriters look at credit. Somebody with better credit has an overall lifestyle of a better risk, less
Okay.
likely to have an accident, less likely to file a claim than somebody who does not.
So if I'm a 750, they're going to say that's a cleaner guy in terms of the way he lives his life versus a guy that might have a 450.
Absolutely. All things remain this other. If everything else remains the same, you will get a better rate than somebody in the exact same situation, same neighborhood. You could live right next door to that guy. Everything, your house is the same, this is the same, and that 750
Okay.
will speak volumes to the insurance
The
company.
750 will get me better insurance than the 450 because they'll assume I live my life a certain style where I'm not running red lights, where I'm not doing certain things as a matter of practice.
Yes.
You know.
Yes,
Okay.
whether or not it's true, I don't know, but
Yeah.
that's certainly the way they look at it. That's in their algorithm.
I
no
understand
question
credit.
about
I
it.
drive like a jerk.
It's also people who keep higher limits are also far less likely. Those are the people who are not getting into accidents.
Okay, so the ones who actually are fully insured are also, by and large, the ones who are safer people.
are not getting into the accidents. It's just I don't know how it works or why it works. They're protecting themselves and they rarely have claims.
And if any group or any industry has really studied human behavior, it's the insurance companies and maybe the casinos. You
The
know?
insurance company is based on what we call, this was something that was on the test, the law of large numbers, in which they are
Law of large
law of
numbers.
large numbers, where the bigger the pool, and especially over time that we see, that's how they base what's going to happen, the likelihood of an accident happening, or the human behavior and so forth. This accident or these claims cost this much over. Obviously, if you evaluate 100 people versus the behavior of 10, you're going to have a more accurate database from
Sure.
which to predict what's going to happen again.
Sure.
And that's how they do it.
Okay, and you know, it's like polling, I guess, but it's how accurate is the poll or how accurate is the pool of people you're looking at. So 100 or 1,000 would be even better.
Even better.
And they've studied that, and you know, you'll see patterns. Okay, and when they start, I guess, reconciling. Okay, well, the people who got accidents, here were their credit ratings. That's how they come up with them. They're not just pulling these numbers out of the air and saying, well, we believe they can verifiably prove that people with, 800 credit scores happen to be the best drivers or the least risky drivers as well.
Absolutely.
And there is a correlation there.
They use the history also. Insurance is a business. They know they're going to be claims. They know they're going to pay out. But the object is to collect more
Then you pay out.
than you pay out.
That's
and that's who they want on their books.
They want to, if it were up to them, they would only insure low risk people.
That's what's happening. I'm not telling you that's what's happening right now. Again, this is why I'm telling you to be so careful when you're driving. Be careful with your claims because there used to be a time where you have a claim and you would just know you're paying more. I'm telling you now, you have a claim of a certain amount, you're just getting dropped. Okay, people are getting dropped in their personal lines. I see it every single day. And if you are so lucky as to get somebody else to pick you up, don't think you're getting a 10% increase.
Let me ask you this question. If the law requires you have to have a certain type of insurance, are the insurance agencies required, legally they have to cover you, they could charge you more for it, but they legally can't say, Sheldon Grant, you're a horrible driver, we're not even going to let you on our bus.
They can do that, and they are doing that.
Okay, so if you're a bad driver and you can't get insurance, you legally can be barred from, or prevented from getting insurance and not be able to drive vis-a-vis the insurance companies.
Worst case scenario, which is we don't really even try to deal with these people, but there can be where every privatized company says this history is so bad, we don't want you on our book. New York State offers what we call the assigned risk, okay, where New York State is your last option for insurance, and they will offer you what's called the assigned risk, but I'm telling you, you don't want to get to that because you're paying through the nose. I've seen quotes
And
where
it's the state.
the state is now your last thing because no private company is going to offer you anything. You've got this claim after claim after claim, and the payouts are just tremendous, and you just shouldn't be driving. I've seen scenarios where on paper it made more sense for the person to sell their car and Uber around than it is for them to keep their car payment and to pay the insurance. I've seen insurance payments that are higher. I've seen premium amounts higher than the car payment.
That's
Because
not
people are
smart,
that's
you
not
know.
good. It's not
and
good.
Get an Uber.
It's cheaper.
All right. So, what do you want to leave the world with? You know, what bits of advice vis-a-vis insurance
Get
or tennis? The guy was a pro tennis player at one point too. So,
everyone, I see the world now through the eyes of insurance now. Play it a little safer right now. We are things are very, very tight right now. And again, if you want the option of insurance companies fighting over you because they want you on your book of business, let's reduce the claims, reduce the risk. I sound like
well, it sounds so self-serving. Buy our insurance, but don't take a claim.
don't
from
use
us.
it.
But don't use
But don't use it. That's really what they're saying. We'll reward you down the road if you buy it and don't use it. You will reap the benefits later, but just not today. That's really what they're saying.
Sheldon, it's been an education. Thank you so
Thank you
much.
for having me. I appreciate it.
My pleasure.